Hey everybody, Courtney Smith here with our March 14th edition of Wall Street Winners. Whoa, what a week. And I gotta tell you, my motto has always been often wrong, but never in doubt. But I have to tell you, honestly, I'm feeling some doubt here. So a week ago, I really felt as though this was setting up to be a double bottom. That is to say, we were going to come down here, we were going to fail to break a new high, and we would rally back up. And this was largely based on the seasonality that we are going. We'll talk about that in a minute, but we should be seeing some bullish seasonality. We got one day up, and then the market started to fail. You can see here the purple predictor started to go down. Now, part of my analysis was that we had, as I say, what was called a double bottom because volume was declining, but all of a sudden volume started to increase. I think this is going lower now. I'm going to amend my opinion from last week, and I'm saying this is just a new leg down in the bear market, and it's going to continue to go down pretty sharply now in the next week or two. The Dow Jones, we're seeing a decline in selling pressure and a little increase, but look at the gap between the green line and the red line, still overwhelming selling pressure. Over here, we can see the same pattern in the NASDAQ that we saw in the S&P, but notice that the purple predictor is coming down faster. It's making lower lows, but the price is not. This is bearish. Our seasonality indicator is a long way away from a bull signal. Now, coming up in April, we may be getting a bullish seasonality signal here in the utilities. So I'm looking forward to that. Let's go make a lot of money there. Now, this is what I was talking about. We've just gone through a period starting over here and in late February, and we should get a nice rally into another week, then maybe a little dip, and then a nice rally into the end of April. But the price action is not really following this pattern. It's much weaker than this pattern. And so as a result, we have to look at this and say, like, okay, so the rally that we saw was based on this bullish seasonality. Now we're about to step into a short period of bearish seasonality. Well, what we're seeing is that the bullish seasonality only moves the market higher a little bit, but the bearish seasonality, like we saw here early in the year, hammers it. And that's what I'm afraid is going to happen now. Maybe it'll take a couple of days before we get into this bearish seasonality, but there it is. Asset allocation, just very choppy, nothing really new there. Stock market risk indicator collapses, then rallies. Once again, they don't want risk, but they want stocks. Obviously, the Ukraine situation is just completely decimating the European stock markets. The yield curve got a pretty sharp bounce up after this move down, and that makes sense. I think we're going to continue to see the long end of the yield curve go up. Bonds, there they are, they're going down. Now, last week we had a very, very strong purple predictor, and still have to say that it's pretty bullish. So don't look for a major bear market here in bonds quite yet. Now, this is a wild chart, okay? I've never seen anything like this in the bonds probably since 1983. Well, you probably remember it too. But what happened here is, it's kind of hard to see, but here's the 10-year treasury. That's the yield. That's the green line. We had a sharp down move, and then we broke to new highs on the yield. Now, it's kind of hard to see behind here, but the chart itself is the CRB, which is commodity prices, and they just took off. And now they're trading way up here. So that's calling for higher interest rates. This gold line is, guess what? The price of gold. It also spiked up, putting upside pressure on interest rates. And then really the most important indicator is this blue line, which is 10-year treasuries in Germany. Come up, 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 collapse, and then skyrocket right back up again. So to me, I think we're going to continue to see lower bonds, higher bond yields. And that's going to be supportive of the dollar. So guess what? Not a surprise that we see the dollar now start to take off on the back of that. Now, higher interest rates are actually bearish for gold because it costs more money to finance your positions when you own gold. So this is actually bearish. Now, what happened is we saw inflation numbers come out at 7.9%. Let me just round it off to 8. So real interest rates are, like if we say 2% on the 10-year, but inflation is 8, that means that real interest rates are minus 6%, which is very bullish for the price of gold. But that spike up there at the end of the week hurt the price of gold. So right now, I have a small long position. I really would like to get super long because of the cheap real interest rates, but can't do it yet. So here we can see here, this is clearly bearish. This is the euro. CRB, I don't know, I might call it up, but look at the yen, just goodbye. Very bearish factor for the gold market. Crude oil spiked up. I came out middle of last week and said I think we put in a high. If you're not going to my Substack or Medium pages or on our email to get the, I called the high in this market beautifully. Not many people can do it as good as I can, that's for sure. So I called the high in the oil market. I think that we're going to try to make a lot of money on the downside, but we may do some backing and filling here. But I think the high of the market is in for this leg. And Bitcoin's really just Bitcoin's just following the stock market, but I'd say with a more bullish bias. In other words, I'd like to be long Bitcoin, short stock market. Purple predictor a little bit bullish. Price action is sideways while the stock market is going down. Okay, freebies, we love you, but the cool kids are they don't like to hang out with you. That's all I can say is they want you on the cool kids by becoming a fully paid up member and getting real profitable trades that I put out in the fully paid up section, as well as more advanced and sharper and cooler analysis in a way that you've never seen before. You see in the freebie section, there's a lot of unusual indicators there because I've studied the markets for 50 years. In the fully paid up member, we take it to another level. So go to WSW2021.com and plunk down your plastic and let's get going making you some money. It'll pay for itself.